There are plenty of things that can get prices moving in the markets each day, and among those are economic data releases, which pretty much happen every day all over the world. And this is why an economic calendar can really help us as traders. And that's what we'll be discussing in this video. But just before we get started, if you are learning to trade and you want to learn the approach that I've used for the past 2 decades, check out the description box down below for more details. So the economic calendar shows us what economic data releases are expected throughout the day, week, month. They'll also often show us when there's central bank activity happening, including any speeches from policymakers who may be revealing something about what direction the central bank is going in with their next actions. So by knowing this schedule, the economic data releases and the central bank activity, it can help us to anticipate and navigate particularly volatile times in the market, as well as understanding more about what's happening in the different economies. So as you might expect, the calendar is in chronological order and it will state what time the release is due to come out. Now it's really important, it sounds simple, but you always need to make sure you double check what time zone the calendar is. And if you can, switch it to your time zone. Because I can't tell you how many times me or I've seen other traders making that mistake where you haven't checked the time zone, you expect an economic data release at a different time and you get caught out, and it can be a disaster. Then, as you can see, it tells you what country the release is for. Now, this is important because obviously each country, each different economy has its own data that can come out. So for example, the unemployment rate is going to be different for the UK, to the US, to Australia, to the Eurozone, and they'll come out individually. So by checking what country the data is for, you'll know what markets it's probably going to be affecting. And often in these calendars, they'll show you the most relevant currency as well, which can be helpful for Forex traders. But to be honest, it's kind of obvious anyway. If the data is coming out for the UK, it's probably affecting the pound. If it's coming out for the US, it's probably affecting the US dollar, right? Then we want to look at the impact, otherwise known as the volatility of the release. Normally this is rated as low, medium or high, but different calendars may have their own approach to this. But basically a low or medium release may move the relevant markets slightly, but they're usually not too much of a problem, only in some situations, which we'll discuss at another point in time. Whereas high volatility releases are the ones that we really need to pay attention to. These can have a major impact on the markets and they can cause a lot of volatility. So if we're trading during these times, or we have a trade open when these releases are coming out, we need to be careful. And these sorts of releases are usually things like unemployment data, GDP, central bank activity. You'll also sometimes see things like PMI, the Purchasing Managers Index, as being quite high volatility as well, but they're not actually as impactful as the ones I mentioned just a moment ago. Then we usually have some other columns, like the previous release, which shows us what the data was last time around, the consensus forecast for the upcoming release, it's obviously a forecast for the one that's coming out, and then when the data is actually released, we'll see it in the actual column, showing us what the actual numbers came in as. Now, how you use the economic calendar will largely depend on what trading method you're using. If you're trading based on technical analysis, then it may serve as more of a warning for when the markets are likely to be more volatile. Whereas if you're relying on fundamental analysis, the data in the economic calendar may help you develop your view of the markets. I personally use a mix of both technicals and fundamentals, and as I said before, there are some links in the description box if you want to know more about how I trade. Now, if you want to be extra diligent, I'd recommend following at least 2 economic calendars. You'll sometimes find that each calendar is missing something that the other one might have, particularly with policymaker speeches and bond market information. It usually won't disrupt your trading too much because they'll usually both have the big releases covered, but even just a small mistake can sometimes be costly, and it doesn't take too much time to check 2 calendars each day, so I'd recommend it. And I think it's also a really good idea to now spend some time getting familiar with the events in the calendar. If you don't know what any of them are, I'll link to a playlist in the description box from one of our other channels where we explain all of the data releases and how they relate to each other. And then go and record what happens in the markets, the ones that you trade, when those releases come out. That way you'll understand what sort of impact they have and you'll be much better prepared for when they're released next time around. If you found this video helpful, I'd really appreciate it if you let me know by hitting the thumbs up button, and why not leave a comment telling me any other trading topics or terms that you'd like me to explain to you next. Thanks for watching.